Okay, let me just give you a brief of what's been going on the Treasury bills market. It's currently bullish simply because of system liquidity. System liquidity is currently made up of CRR reforms that came in sometime last week, and then compounding Treasury bills maturities we have received. In about 6 weeks, just about 44 billion of OMO maturities have been sold. But if you look at what has matured, within that period, we have seen more than 1 trillion coming. So there's fewer Treasury bills on offer compared to Treasury bills being that are maturing on every Thursday. Today, just 58 billion is maturing for Nigerian Treasury bills, and tomorrow we expect 194 billion worth of OMO to come in. Well, if you check the track record of what has been going on, the trend, the central bank has not been selling so much, and in the last 2 weeks they sold just 4 and 40 billion respectively. Going forward, there will be a bond auction where 20 billion each of the 3 maturities on offer will be sold. That is also not so much compared to the deficit that has just been readjusted. The budget deficit right now is about 5 trillion, and if you look at the 2.5 trillion which they plan to raise from IMF, World Bank, and AFDP, there's still gap and room for more borrowing. So there's likely that at some point the DMO will be making some local currency borrowing also. Of course, the lockdown means that even the central bank and most of these agencies are working in a doing skeletal work. So we have not been able to put some flesh to how much they'll be raising. But if you check the amount the DMO is raising currently via the Nigerian Treasury bills and the bond auction, there's still some gap to be filled. We're not sure whether it will be filled locally or by foreign exchange arrangements currently.
All right, but Bankole, I'd like to still go back to the FX market and try and get a sense of the CBN's intervention strategy so far. We're saying that there has been they've not conducted the usual weekly auctions in that space. What is happening there?
Fine. There's been reduced activity from the interventions on the central bank. Don't forget also that most of the aviation sector there's been lockdown, and globally there's been a slowdown in trade. Global trade is reduced, aviation has reduced, so there are few travelers even demanding for funds. So basically, even the demand has been affected by the global slowdown that we are experiencing because of COVID-19. Upon resumption of activities, people are saying before the end of Q2, we expect demand to kick in, and the demand is expected to be very high. We expect that the CBN right now will be positioning themselves for such a demand should the lockdown be lifted. That's the plan and that's the view. We expect that demand will be very, very, very steep upon resumption of activities, not just in the country, globally.